Hey, welcome. I want to talk about commodity super cycle, not just commodities, but a commodity super cycle. And what the heck is a commodity super cycle? There's a reason why I wanted to bring this up. So, first of all, this is basically a fancy word for a long-term bull run for commodities. And the reason why I wanted to share this with you is there's really two reasons. Is these typically last right around 17 years, and I'll share with you how I got to that number. This super cycle just got started really right around 2019, 2020. So the two reasons why I wanted to share this with you, things are just going to get expensive this decade. So from an education standpoint, if you know that commodities are going to increase quite a bit in price, then I'm hoping that my video will allow you to plan properly. Or from an investment standpoint, commodities for the duration of this decade, they look to be a really good investment strategy, especially when you want to compete against inflation. Is commodities the best out there? Probably not. I still wear that crypto tattoo, and I still feel like those are going to massively outpace inflation, let alone commodities. But commodities still could potentially be a wonderful investment. Let's hop into this. So here is something from Wells Fargo, and this came out March 30th of 2023. It's the Commodity Bull Supercycle. There is a PDF, which I'm going to share with you in a second, but this is going to be in the notes. If you want to take a look at this, there's 14 pages in here. I've been looking at commodity supercycle stuff now for about 3.5 years. This is one of the better information pieces that I have found. But what it's saying is that on March 2020, a new commodity bull supercycle was born, and commodities have since outperformed most assets since that time, which is true. And then per Wells Fargo, they suspect they should now for years to come. And commodity prices have generally tended to move together over multi-year periods called super cycles. Wells Fargo believes that the 2020 market was the start of the new bull super cycle. So here is the PDF itself. And again, this is in the notes section. But what I want to just draw your eyes to is this little graph right here, this little table. So right here it says the commodity bull super cycle. So you can see right down in here, there's looks like to be a little over a handful, which I'm going to go through in a minute. Then this section right here is the percent gain during the actual cycle itself. Here is the duration or the length in terms of years. So right here, looks like there was one back in 1791 to 1814, and this lasted 23.5 years with a gain of 132.5%. There was one in 1843 to 1864 with a gain of 208% through the duration of this. It lasted 21.6 years. So I won't go through all of these, but here was one in 1971 to 1980. 249% lasted 9 years. I'm going to go down to today. So this right here, 2020 through current date. So right now, the super cycle commodities on average are up almost 81%, and we're 3 years into it. And right here is what I want to draw your eyes to. The average percent gain for a commodity super cycle is 247% with a duration average of 17.6 years. Remember, we're in this now 3 years. So if the averages hold, we've got another 14 years to go. And so that puts us well through this decade into the next decade. So here is another chart. This is not from Wells Fargo, but this particular graph has been tracking these super cycles, what looks to be back to like 1805. So these red dots right here, these are the major peaks, the inflation peaks, and then the blue dots down here, this is the trough or when they actually began. So you can see right here, this is 2020. We now are right here. So this is that 80%. So this graph, by the way, was created a few years ago. I think it was created back in like 2019. But right here is where we were at in 2023, up 80%. According to this graph, this is saying that we might go to the year 2045. The average duration for a super cycle is 17 years. So if this started in 2020, that's actually not very far away from 2045. That puts us into 2037. So point of this graph is we are here right now, and we've got all of this upside to go. I want to dig in just on some of the fundamentals in the mainstream media and what they're saying. But according to Reuters, this came out March 21 of 2023. Goldman Sachs expects commodities supercycle. Here's one from Market Watch, and this came out April 5th of 2023. But the headline is the commodity supercycle is still young, these strategists say, and here is why. Here's another one, and this one came out about a week ago. And the headline of this is inflation seems to be falling, which it is. It's falling off like a cliff. However, it says that doesn't mean the commodity supercycle is over. Because remember, nothing goes up in a straight line. And I'll share with you in some of the charts that there's just been a kind of a air quotes healthy correction. And on some of the charts I want to share with you, it looks like the bottom is in for quite a few of these. And we've got some breakouts coming our way soon. By the way, I thought I should probably share this. I'm probably getting a little too ahead of myself, but this is Google Bard, and the prompt is, what are examples of commodities? First of all, there's hard commodities, and these are natural resources that are mined or extracted, such as gold, silver, copper, iron ore, crude oil, or even just think of like coal. I've got some information I want to share with you on coal as an example, as well as I've got a chart on the WTI crude oil. If you could stay, I'm coming up on those charts here in a few minutes, but those are very interesting. Soft commodities, those are ag products such as livestock, which by the way, I've got a chart on livestock. Boy, if you're a steak fan, beef fan, it is going to get expensive. So anyways, soft commodities, livestock such as wheat, corn, soybeans, coffee, sugar, and cotton. And then here, energy, we got crude oil, as mentioned, natural gas, gasoline, which I have a chart on, which I want to share with you, heating oil and electricity. And then we've got the rocks, the metals, the gold, silver, platinum, copper, iron ore, more ag products such as wheat, corn, soybeans, rice, coffee, sugar, and cotton. So hopefully that helps give just a really basic overview of what commodities are. As mentioned, I thought I would start with coal. The only reason why I want to start with coal, nobody ever talks about coal. And so here is the ticker. It's XAL1. And this chart, this line chart, goes back to 2010. And what I want to draw your eyes to here is right around mid 2021, coal had a massive breakout. So in around 18 to 24 months, coal was up plus 372%. About 18, 24 months. Again, plus 372%. And I didn't hear anybody talking about it. And as some of you know me, I just hang out with these charts, and this thing was like, it's a secret, which nobody ever chats about. But this is, to me, the most important. This helps validate is right here. It looks like coal has bottomed, as well as other commodities. And it looks like it's doing some basing, which you're going to see here in a little bit, such as on the oil, which has been basing for a while now, and it's already made its move to the upside. So that's coal, and I just think that is very interesting when we're in this whole new ESG movement, clean air, but behind the scenes, we are still using coal. And not only are we using coal, but we're using coal like we never have before. So this is from oilprices.com, and this was August 4th of 2023. And it says right here, coal use hits record high despite the clean energy boom. There's another one from August 5th of 2023, and it says, coal use reached a record high of 8.3 billion metric tons in 2022. It says right here that, and it's continuing to grow due to the use of India and China. You may have heard this, but India just surpassed China in terms of the most populated country in the world. And what also should be in here, which is not, is the United States. We're burning through more coal than we ever have before. Now, here's one from HayesPost.com. This is not about coal, but I want to mention this because this is around gas prices, because I have a chart on gas, which I want to share with you. But this came out August 4th, 2023, and it says, expect a jump in U.S. gas price as Saudis extend oil production cuts. By the way, when I read headlines like this, I never know which is true or which is not. However, when I look at the charts, so as you're going to see, I see oil going up around 260% in the next few years. And the thing I love about charts is there's no mainstream media, there's no emotions. It's it's reality, it's human behavior. So anyways, I want to share this with you about gas prices. I don't see those slowing down anytime soon. Here's one, August 4th. This is a short read, but U.S. energy firms cut number of oil rigs to 659. By the way, let me say this, and this is not meant to be political by any stretch of the imagination. I'm not into politics at all. I'm thoroughly disgusted at both sides of what's going on in Washington, D.C. However, let me say this. You may not like this comment, but I truly believe that we are now a liberal nation. And as a result, I see Biden winning again in the next election, which is November of 2024. And as he has been tightening down around anything commodity wise, like oil, natural gas, you name it. And if he does win again, I actually see him really tightening down all of this going into his next 4 years. And then especially you combine this with ESG, and ESG, according to Bloomberg, is going to be a $52 trillion space by the year 2024 to 2025. And this is going to be a big part of this in terms of the Biden administration. So again, this is not meant to be political, but I really truly believe, I've been studying demographics now for about 18 months. We really are a liberal nation, and I can't believe I'm saying this. I actually see even Texas, of all states, Texas. I don't think it's a matter of if, I think it's a matter of when we get a liberal, a Democrat governor in that state. I hope that didn't offend anybody, but I just want to share with you where I think we are going, especially if the Biden administration wins again in November of 2024. And if Biden has his way, or the powers above him and around him, we're going to be tightening down, which is going to drive the cost up of these commodities. Because if you think about it, if oil's going up, gas is going up, that means cost of airline tickets are going to go up. If we got to ship these commodities via boat, as an example, the cost of gas, diesel, as an example, for these big freight liners, that's going to go up. And again, I see oil going up. I'm going to share with you here in a second, right around 260% in the coming years. So let's dig into some charts. And you can see right over here on the right, looks like maybe there's 9 or 10. And I want to go through these. I may talk fast through some of them. So let me start with oil to get started. So I've got a little illustration right here of this bull flag pattern. I'm going to walk you through the pattern that I'm seeing for oil. I don't know if I mentioned this, but this is US oil and this is WTI crude oil. Each one of these candles is 1 month. So we're going back to the mid 1980s right here. So what I want to draw your eyes to, if you see this flag right here in this illustration, this is this. And you can see that we've got a flag, and let me walk you through this. So we've got a nice touch here, touch here, touch here, as well as this is a wick, but the candle body closed. There's 2 of them, which were right here. We had a nice respect here as well as here. And if you look at this center line, it just respects, price action respects that center line throughout the duration of the flag. So here, we've got some reactions here. We definitely had a reaction here as well as here. And then we've got these nice moving averages. These are the SMAs. This is the 50, 100. No, excuse me. This is the 100, 150, and the 200. So price action is well above the moving averages, and the moving averages are squeezing now, which is what we want. Now, here's what I'm seeing. I've seen this pattern so many times. I call it a BRB. It's a breakout, a retest, and then a bounce. So again, a BRB, a breakout, a retest, and then a bounce. Now, this is what I forgot to mention. So back to this illustration. See these 2 green arrows? This is what this is trying to illustrate. And right here on this illustration, this right here, they call this the flagpole. So in essence, here is the flagpole. And the measured move are the flagpoles. So the measured move starts right at the breakout of the flag. So we could start it here, but I'm just going to start it right here. So you can see this, there's a lot of room to the upside. So let's fib this. If I were to fib from this swing high of August of 08 down to this low, June 2020, I'm going to swing it over right there. But this brings the price of oil to right around almost $500. I know that just may seem crazy. We can move some of these pivots for this fib as an example. So if we just come down here, you see, even if we come here, yeah, this is better. Yeah, this is better. But even if we come down to this pivot and we still, again, swing high down to the swing low, this brings the 1.618. Just look all the way to the left, back to the all-time high. And if any of you are familiar with breakouts from all-time highs, these can be very strong move to the upside. So that's the 1.618, which I definitely see in this move right here. But this 2.618, assets love Fibonacci's. And they definitely love the golden zones, the 2.618, the 1.618 as an example. But if I were to measure this move, so from right here, this little horizontal black dotted line is current price action. So just right here, and I see this happening with a high probability to the 1.618, or it takes us right up to the all-time high, which we would now call the neckline. But you can see right here, that's about an 82% move. And I don't see this taking too long. Now, granted, these are monthly bars, a year and a half, maybe, in terms of oil going from $80 a barrel to 142. Now, if we get price action to do what I think it's going to do, this is not the best drawing tool, but it could potentially do something like this and bounce and just go right up here. And that's actually a very realistic pattern. And again, I actually see this playing out this decade in terms of oil prices. This is gasoline. The ticker is UGAS. This is from Wisdom Tree Commodity Security, Ltd. And right here, it's gasoline USD. And each one of these candles, by the way, is 1 month. So this takes us back to, looks like, early 07, but I put in this blue trend line. So the trend line started right here. It respected it here the third time. And then, so this is overhead resistance, but then we had a breakout right here. And then that breakout, we came back down and we tested the trend line. So the trend line now, this is a classic SR flip, support and resistance flip. So this whole section in here now is acting as support. So this thing has been basing now since, I don't know, it looks like sometime in late 2022. And this is actually an extremely bullish pattern. Here's current price action right here. And if I were to draw a trend line right from this high right here, so that is now the neckline, the move from where we're currently at today, that's 24%. I easily see this happening, easily, because of this, because of just this pattern right in here. Once this thing breaks out, I actually see this somewhere in this level is going to be the new kind of resting spot. So right there, what's going to go up? What did we say? What did we say? It's going to go 24%. But this is the key. Once or if, and I have a high probability thinking it's going to, just because of what we just looked at for the price of oil. But when price action breaks out above this blue horizontal line, I see gasoline going up quite a bit. Let me just share with you what I mean. So I see gas doing something, not the best drawing tool, but I see a breakout and I see a retest, go sideways a little bit, then I see this. Easily see this happening, and this takes us right around to 2028, give or take. So point is, remember the article we saw around the price of gasoline is going to go up? Well, here's the chart, and this is actually an extremely bullish chart. Now, these are monthlies, so it's going to take some time to play out. So here's one. This is the Bloomberg Commodity Index Futures, and each one of these candles represent a month. And let me just share with you what I am seeing in here as well. Let's see where we had this correction. This was in June of 2022, but it looks like we found a bottom. And here's why I think this bottom is going to stick. It's because we had this nice little chunky area over here. And then we also had this over here. So this to me looks like the bottom. And then obviously right here is going to be the neckline. And I want to share with you an indicator that I really like. This is a EMA SMA ribbon, and this talks about the strength the asset, and if we go to a smaller time frame, so I just went from a month, I think we're on the month, but now I'm on the weekly, and here's what I want to share with you. So if you've watched any of my videos, you've seen me mention this a couple times. Again, this is the EMA SMA ribbon. And the primary reason why I like this is because of the colors, is because red equals weakness, and then green equals strength. And I don't know, I think there's probably 20 or so moving averages in here, but you can see this green right here where price action came down, respected it really nicely. And there's just all of this thickness of the green. The moving averages are so tight. That's why we've got this strong green fluorescent color, which means all these moving averages are binding. In essence, we're looking like this right down here. So that's another reason why I see this move up to the neckline right here. I see this as a high probability of happening. It's hard to say, but next 12 months, give or take. So again, another validation point in terms of commodities, according to this chart from the Bloomberg Commodity Index Futures. So we are looking at the GF1 exclamation point. This is the feeder cattle futures. So, and each one of these candles represent a week, and this is on the CME, the Chicago Mercantile Exchange. But unfortunately, this is a ridiculously bullish pattern. And let me walk you through this. So right here is the all-time high back and looks like around 2015. Now you fast forward to today, and price action is now above those 2015 all-time highs. And if you can see this, I'm drawing this way out to the left, this kind of black, faint, dotted horizontal line. That's actually current price action at time of recording, which you can see. So here's the all-time high in late 2014, and price action, which is right there, is now above that high. This is what this means. See this big, giant, the bottom from the top right here, this neckline? These are typically measured moves. And again, just for simplicity's sake, I won't get too technical because I want just to be in the spirit of time, but let me just share with you what I'm seeing. So from a measured move standpoint, so if we measure again from the neckline, that blue horizontal line down to the bottom, say, of the price action, and if I were just to clone this and bring this right here, this actually makes a lot of sense. But let me just share this with you. And this is why I wanted to create this video is if you're like me, don't judge me, but I love fillets. Absolutely love fillets. The steak and potatoes, it's one of my all-time favorites. And you ready? I actually see the price of beef going up another 55%. So from the COVID low, cattle, the price of beef at the grocery stores at minimum, we're going to see again from the COVID low, 270% increase, or at least now, at the time of recording, I see another, again, 52%. And if this thing holds, I think it might. This is what's crazy, is this. So if this holds, I actually see doing something like this, potentially. And then it's going to base a little bit. This is a stage 1, and then we're going to go back into a stage 2. And it makes sense if you think about, again, in terms of the price of cattle, beef going up, because if you think of what's going on in terms of all this manufactured meats and chicken and dairy and this, whatever you want to call it, going on with all this chemically induced new air quotes beef out there, like that Bill Gates is involved with, I can easily see why there's going to be an attack or a siege on cattle and proteins as an example. So let's take a real quick peek. This is sugar. So this is SB1 exclamation point, and this is the futures market. And each one of these candles represent 1 week. And what I want to share with you is back in like late 2010 late 2010, this was the all-time high for sugar right here. But we had a breakout, and we had this breakout right here, which looks to be like early 2021, and right here. And then we had a nice retest, and then now we're doing this breakout. And then I've got this EMA SMA ribbon overlaid, so you can see right here with the green. Just a ton of strength. And if I were to get rid of this, the moving averages, right here. So here is the SMA 200, the 150, and the 100. And these are in a ridiculously bullish formation. But the good news is I can't stand sugar at all. I wish I would have figured this out years ago. So hopefully, maybe sugar priced people out of the market. But I see sugar, let's do a quick measured move on this. I see sugar going to the all-time high in terms of price-wise at 53%. And I actually see that happening in the next 12 months or so. And unfortunately, if this thing breaks through the neckline, which I'll do another video on in here, who knows, maybe 5 or 6 months to take a look at where we're at. But if sugar breaks out of this neckline and the neckline is, yeah, so here is this is where the all-time high is, but at the top of this box right here, that's the neckline. So let me draw that. So if we see price action there and it breaks out above that neckline, sugar is going to go through the moon. It is going to go biblical, which again, I think is a great thing, especially for kids and people's diets and things like that. But unfortunately, it's going to get ridiculously expensive. Speaking of sugar, this is cocoa, and each one of these candles represent a week. Yeah, cocoa right here, weekly. And you can see right here, this was the all-time high. Looks like it was late 2011. And here we are at time of recording. And we are not that far off from the all-time highs. Let me do this again. We're a little over 7%. And unfortunately, I think it's going to, but if price action breaks out above this neckline right here, I actually see the price of cocoa going up, something like a breakout, something like that, come back down and do a retest, and then we could see another bounce to the upside. And when this pattern right here, unfortunately or fortunately, depending how you look at sugar and cocoa, this is going to be extremely expensive. And I see this in terms of price point. If this thing does break out above the neckline, yeah, an easy 25, 30, again, yeah, here we go. Maybe 40% to the upside. So what is that? If we include where we're at today, that's going to be about a 47% move to the upside. If that does not sound like a lot to you, maybe it's not. But if you add in how every other commodity, like we saw with oil, what did we say? Up like 260%. And remember, the average commodity supercycle, the gains are right around 270%. And we still have another 14 years to go if we play the game of averages for these supercycles. So that's why I'm saying everything, not everything, but commodities throughout this decade and going into the next decade, we've got a high probability that things are going to get really expensive. So here is the XLE. This is the Spider Select Sector Fund. This is the energy sector right here. And each one of these bars represent a week. And we're getting really close to this all-time high, which was June of 2014. And just to put it in perspective, if we were to measure where we're at today, we are only just under 15% from the all-time high. And nobody's talking about this, at least in the US. But let me just share with you, because we had nice, yeah, there. It's a little better. Right, there it is. Yeah, okay. Let me get my drawing tool. So we had a breakout right here. So on that breakout here, and then we came back down and did a retest. And now we are in the process of a bounce. And this whole pattern, if you just look at these moving averages, remember this black one is the SMA 200, here is the 150, and here is the 100. And if I were to overlay the handy dandy EMA SMA ribbon, boom, this is why I love this thing. You can just see there's so much strength in this move. Depending on how you look at it, energy, from an investment standpoint, this is where the smart money is buying in. We're going to start to see our energy prices creep up quite a bit because remember, right now, this is 14%, but if this thing breaks out, I can see energy going up another 50-some percent. Who knows, in the next 12 months, give or take. So the US is going to probably start to feel like, say, Europe, as an example, and some of those other nations where those utility bills are in some cases, they have 10x'd over the last year or so. And I think the US is really, for the first time that I've been alive, energy is going to become a hot topic, unfortunately, here in the US. So this is the absolute last chart. I wanted to end this video with water. Thank you again so much if you have made it this far. So right here, we've got the Invesco Water Resources. It's an ETF, and these are weekly candles traded on the NASDAQ. And I've got a zoomed out view, and I'll tighten it up here, but I just want to share this with you. So right here is the COVID low. And then also this moving average right here, this is the 200 weekly moving average, or AKA what some people call the godfather of all moving averages. Again, the 200 weekly moving average. And this green one is the 50 SMA, and it actually turns red depending on where the price action is. If price is above, it turns green. If price is below, it turns red. But in this case, this, again, 50 SMA, and this little black one right here is the 21 EMA, and this blue one right here is the 10 EMA. So from a setup standpoint, this is ideal. And also, if we look down here, volume is declining, which indicates that sellers are diminishing. So this is also telling us we've got some volatility coming soon, just not too sure when. Or just waiting on a confirmation breakout like one of these candles here, these big ones that break out through this moving average. Let me share with you what I am seeing. So first of all, I'm looking at right here, it looks like we'll call it a rounded bottom. There's a couple things that we could call here. It's something, it's a little crude. I'm trying to hurry just in the spirit of time. There's a rounded bottom, and if we were to just bring these up here, if I were to just do some cleanup, tighten it up a little, something like that, you can see. So there's that look, which I will get rid of. Or another thing, or right here, we've got a kind of a double bottom per se, but here is the neckline. And once price gets to that neckline, and again, this is a really bullish formation pattern. Gosh, the technology sector's in this pattern. NVIDIA was in this pattern, but it broke out massively to the upside. But a lot of tech stocks, as well as these AI companies, again, like these semiconductors that are in that NVIDIA space. So AMD, it actually looks just like this. AMD is literally almost in this identical pattern. Let me draw this. So if we were to draw right here, this is the all-time high, and this all-time high was back in January of 2022. By the way, before we get going here, just from the COVID low to this all-time high, up 131%. Now, as to where we're at today, it's plus 117%. And then from where we're currently at for price back up to the neckline, we've got about another 6.62%. This is what I'm seeing. So right now, a lot of like the tech stocks have come up to these necklines and they're getting rejected and they're just basing, but that's not a bearish sentiment. It's 100% normal to see these types of corrections, especially with where price is in relation to these moving averages. So if price gets to this neckline, another 6%, here's what I'm seeing. So we could hit this neckline, go sideways, or we could come down for a correction, or get rid of that, or we could just do this meander, and this takes us into kind of late October of 2023. Then we could either have a breakout and then a retest as an example. There's a few ways that we can play this, but I could see it something like this as an example, or we could just shoot straight up, because again, this looks like a nice setup based off of these moving averages, but we could shoot through just like this, come down for a quick retest, and then boom, we are off. But let's measure this and we can wrap up the video. But boy, again, I know it's water, not very exciting, but I could see, so right here, that's a 13% move, and then up here, that's right around 22% move. And if you're wondering why I chose that area, and that's because this is a measured move scenario. If I'm somewhat conservative, yeah, so it's about 11% around the neckline. Let's see where this takes us to where that green line is. Yeah, close enough. Man, so from the COVID low, from the COVID low to right there, water looks like it's plus 170%. And it's just interesting, in my lifetime, I'd never thought that I would see the price of water in the United States go up 170% in just a few years. So that's probably me being a little naive, being a little spoiled, living in the United States. But this goes to my point, and I'll wrap this up. This commodity supercycle, water's a commodity. If the commodity supercycle, in terms of averages, this move looks like it's just getting started. And if we were to measure from the COVID low, remember, so according to that Wells Fargo, right, we've been in the commodity bull run for 3 years. And on average, we're up 80%. Well, water it's above the averages. It's up plus 131%. And let's say that we play the game of averages and we're going all the way to like what, 2037, and we're only 3 years in. If averages stick, boy, again, water, it's going to be expensive. And I feel terrible for these second world, third world countries, and water is going to probably be like literally like gold. It's going to be in high demand and they're going to pay a premium for it. So anyways, hey, that's it. And thank you so much for sticking around. And I really am grateful. So I hope that was helpful, at least maybe from a planning standpoint and or an investment standpoint. If you have any questions or comments, I'd love it if you could just leave me a comment or a question in the comment section, and I'd be happy to answer or share my thoughts on that. So that's a wrap. And thank you again so much.